Hey guys, and welcome back to a new case study. We've got the new setup as you can see, so hope you like it. I kind of woke up from a power nap just about 10 minutes ago, but doesn't matter. It's a bit strange because I have my computer here, then I have my big screen here. That's how we usually do it. And then on the left here, it's mirrored as well, the camera. On the left here, I have my, I can see myself, so still getting used to it, but hey, something new. Let's just try it. I think it's good that you guys see the guy behind the analysis, right? So let's go into it. Quick, nice and easy, short on Monday, and yeah, let's just quickly go into replay mode and break it down, top down. I actually wanted to do this morning, but I was busy this morning, so let's do it right now. Let's zoom out and let's start this case study from the top. So, in the forecast of this week, I said okay, we can wait for price to come up here and then look for a short. However, we don't need to, because we took previous weekly highs, which is a significant high. With that, we of course took previous daily highs as well, and we also took Monday or Friday highs, previous daily high. And then Monday created a little push to the downside. But during that New York session, sorry, I'm tripping. During that Asian session, we kind of filled up this gap. And what really happened is that we have a low, we have a high. Then we created a higher low, a higher high, followed by a bearish break to the downside, indicating or inducing sellers. Why? Sellers try to sell now. They see a bearish lag and they're like, all right, let's go. So they try to sell from the premium area or somewhere here. And as you can see on the 5 minute, there was that little inducement. So even a confirmation for some traders, they're like, okay, now we push to the downside, a bearish candle. So they step into the market. They have their stops above this high or above that wick there. But nevertheless, they get taken out. And with that, we start London, and during Frankfurt and London, we push to the upside. We just about take up previous weekly highs, and although we didn't get up here, so let me zoom out a little bit more. Although we didn't get up here, we did get up here. We did take that liquidity pull over there, and we just have this nice POI, that supply zone sitting above that liquidity. We also knew that we have this bullish range still going on, so both based on the PY and liquidity and the structure going on, we are above old highs. We have a high time frame supply zone, and yeah, we're looking at lower pricing. So now let's zoom in and see what's going on there, because we took previous weekly highs, we have the early sellers, so all we need now is a lower time frame structure that we can trade off, and we need a bearish break for that. And you can see we have a low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So here we have a minor break. You could class this as an additional, or actually you have your early sellers here, so this could be your first trade. But then you fail to ignore. So sometimes this is possible, but then you fail to ignore that we have this low that led to the high internal range liquidity taken. So all we did there was come back to the demand zone to then take out these highs here. Then price gets the proper break. We get nice slowdown. So here we get up here. Price goes lower. So inducing slightly more sellers into the market. Sort of a support and resistance zone, as you can see there. Let's do that one. Yeah, sort of a support and resistance zone there. And really, price pushes up, just about takes that previous weekly high, then gets a push to the downside, and we get the most minor break ever there. Where we just literally by, what is it? Not even, yeah, just one pipette. Take out that low, but break is a break. Although, like on the high time frames, it can sometimes be that price. Now you can see me yawning as well. Sometimes it's just that price breaks and it's a fake out. You can clearly see it. Well, last time I was wrong. Oh, my eye is tripping. Oh, it's so strange. But this time I thought like, okay, proper break. I didn't take this trade. I was working, but I thought I could make a case study in this. So then we have our nice entry zone, 411. So 401 is our entry, 1 pip. And then for this one we take half a pip. And there we go, and you can see we already hit 1 to 4. So that's where you take 80% of the trade. And then if we just let it play out, and price comes back, so we're already at break even or even in profit. Takes out the takes out the remaining 20% of our trade. And that's it. So, yeah. What else is there? So I was actually targeting these lows, and I saw this building up here. So I was like, okay, that's nice. Little trend line building up there. So it was a valid target, but price didn't get there. And yeah, if you just go out of the replay mode, as you can see, it literally came 1 step higher, and I think there's another entry during New York. Ooh, let me pull it to the side. There we go. A little bit of shuffling around here, but there we are. Yeah, so same story here. Low that created a high, bearish break, bullish break, bearish break, entry, and that's the entry of the day, and that gives us the turnaround of the week and brings us lower in price, really. And this is where we are right now. I was actually expecting a lot of movement during New York or late New York because of Powell speaking, but we didn't get that. But that's for tomorrow morning, where I catch you guys in the pre-market analysis. So this is the case study. Again, high time frame confluences being the supply zone, previous weekly highs, liquidity, bullish structure that is above all highs as well. So targeting lower pricing was very valid. This was the case study. If you got any questions, let me know. Hit me up, shoot me DM, whatever. And catch you guys later. Peace out.